Hey guys, welcome back to my channel, McNallie Money. Today we're talking about a stock that's been all over the news recently and has been making headlines everywhere. It's a little company called NIO. For those of you who haven't already, please hit the thumbs up, subscribe, and get ready to learn a little bit more about the Tesla of the East. So let's talk NIO. We're going to be going over three things in this video, specifically the recent news and NIO Day announcements, price comparison and projection, and then the trade strategy I'm looking to roll out with this company. First and foremost, I wanted to talk about the big three announcements that came out of NIO Day. So if you look on their website, the ET7 is front and center. This is the new sedan that they just rolled out. For those of you who haven't taken a closer look, it's a pretty slick looking unit. Obviously it's got all the amenities and class of the Model 3, but there are some definite differences. So one that I wanted to point out here is actually pretty slick. It's using the new LiDAR system. So this vehicle is going to be autonomous, nicknamed NAD or Neo Autonomous Driving, and it uses LiDAR. It does have a series of high resolution cameras as well, but the LiDAR really differentiates it. You can see here they've integrated it pretty smoothly right above the windshield, and this is essentially going to tell the car where it is in relation to everything else on the road. It does have the soft closed doors. Another feature that I really liked was standard massage in all seats. And the cockpit platform itself is called Snapdragon and powered by Qualcomm set of chips. In terms of performance, very similar to the Model 3, 0 to 100 in 3.9 seconds, and the company expects deliveries in Q1 of 2020. Now, there were a couple other big announcements that actually relate to the ET7 as well, so I wanted to talk about those quickly before we get into price predictions. The first of the two were the new battery pack. So you can see here, NIO's offering a 150 kilowatt hour battery. Now this is going to allow the ET7 to get up to 1,000 kilometers range, which is pretty astounding when you think about it on a single charge. The other thing that I wanted to quickly talk about was the new Power Station or Swap Station 2.0. Now these are capable of swapping 312 batteries per day, and the company expects to have 500 stations in use by the end of 2021. When I look at this, I just see the future, you guys. This is honestly pretty slick. Now when you do drive your car into the station, it literally is a single tap on the center console. That'll initiate the autonomous battery swap, and away you go. The next thing I wanted to talk about after these announcements is the price of the stock itself. So you can see it has pulled back here, down about 8% in the last trading day, so January 15th, and we're sitting just above $56. Now this stock has had a massive run in the last year, up from like under $5. You can see north of 60 in some scenarios, which does have me a little bit skeptical buying in at these rates. However, as we've seen with Tesla, this is an industry that's on the cusp of doing some great things, and it would be a shame to miss out just because you feel like you could have got a few dollars cheaper. If we do look at Tesla in comparison, you can see Tesla also had a slight pullback. Now they're sitting around $826 per share, or a market cap of $783 billion. If we compare market caps between the two companies, we can see here NIO is sitting at about 88. So on a market cap basis, Tesla is about 9 times the size of NIO currently. However, if we look at vehicles delivered, NIO did about 44,000 in 2020 versus Tesla's 499, just shy of the 500,000 deliveries. So from a vehicles delivered standpoint, NIO is about 11.3 times smaller than its peer Tesla. Now, if we're looking at a kind of comparative valuation, you could say that NIO is more expensive per vehicle than its peer Tesla. However, there are obviously some other elements that we want to take into effect there. Now, we've talked about kind of the two leaders in the autonomous driving. There are a number of other players in the electric vehicle space itself. So I pulled up this chart. This is slightly outdated, but it does show kind of the top 20 brand ranks. Tesla obviously up top. But you see a lot of traditional automakers in here, so Volvo, Audi, Hyundai. It's not till actually the 20th spot that NIO pops up, so below Ford and Mitsubishi. Again, I don't think this is necessarily a make or break scenario, but it does indicate that this space is very competitive. And although a lot of these companies don't offer autonomous solutions, many of the customers may not be looking for that right out of the gate as they take their first step into the world of electric vehicles. Now, in terms of price targets for the company, so we talked about the comparative price versus Tesla. This is an analyst rating website here, so you can see there's 13 analysts covering currently, ranging anywhere from about $91 to $400 price targets. Now, obviously, I feel like analysts have been a little bit slow off the bat to start talking about some of these vehicles, and a lot of them honestly got caught with their pants down in the Tesla situation. So I feel like a lot of analysts are talking about this stock and looking at it at kind of as the next Tesla. So that being said, I'm not sure if these price targets may be a little inflated. 400 definitely seems high to me, but we'll talk about my opinion here in a second. So if you look at the expected deliveries here, it's saying NIO is expected to hit about 150,000 unit capacity by this year, so the end of the year, which puts it roughly 3 times where it is currently, with the 44,000 deliveries in 2020. So if we look at the numbers just strictly based on its current share price times the expected delivery increase, we're looking at a price target around $150 by the end of the year, which sits nicely in the middle of these analysts. It is on the lower side or the more conservative side, but like I say, I feel like these may be a little bit inflated given the competitive environment right now. So if we take that $150 price target based on deliveries alone, and assuming everything else stays the same, then we can start talking about some ways to trade this stock. The other thing I wanted to talk about in here is just the percentage of car market in China that's expected to be electric. So you can see here, JP Morgan is expecting 20% of total vehicles by 2025 compared to under 5% in 2019. So the market is there for sure. Again, it just depends which one of these companies is going to take that big share. Tesla is obviously competing in Asia right now and on NIO's home turf, so it's definitely going to be interested to see what happens. So if we go back to Yahoo now and we start thinking about maybe that $150 type of price, there's a couple different ways you can play this. Obviously, with a price target nearly 3 times the current share price, this is probably a stock that I'm going to look at opening a position in. The real question for me is whether we go an option strategy or shares themselves. So if we bring up the option chain here, these are expiring January 2022. So it does give us a little bit of time here for the year to progress and the deliveries to mature. And the strike price I'm interested in here for comparison's sake is the $60 strike. Now, those are trading just over $20 a contract right now. So if you were to purchase this, you'd be looking at about $2,000 per contract. So if we're doing some quick math, essentially you'd need the share price to get up to $80.40 just to break even on this contract. Now, if we start looking up from there, $80 is break even, $100 share price would be 100% return, 120 would be a 2x, 140 a 3x, and 160 would be 4x your money. So let's just assume we did get up to the $150 share price. You'd be looking at a $7,000 return from a $2,000 investment. Now on the flip side, if we were to go out and actually buy shares of the company, $2,000 worth at $56 a share, that would mean you'd be able to get about 36 shares. Now, if the company were to go up to that same kind of $160 rate, that would mean you'd be looking at a $5,800 profit or a 288% return. So you can see here the option strategy obviously has a lot more risk in terms of the contract expiring worthless. But given the amount of focus on this area, the excitement by the analyst community, and the total addressable market in Asia, I feel pretty confident over the next 12 months that this stock's going to be moving up. And I think an option play here is the way to go. So hopefully you guys have found some interest in this video. Thanks for watching and have a great day.